Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Chan, you're watching Indian Open. Let's go straight to the headlines at this hour. Donald Trump says the US is winning the trade war with China after arriving at a temporary truce with Chinese President Xi Jinping at the G20 summit. Oil gains after Russian President Vladimir Putin strikes a deal with Saudi Crown Prince Mohammed bin Salman to extend output cuts for the rest of this year at least and potentially into early 2020. Reliance Home Finance rolls over repayment of 400 crore of its non-convertible debentures held by Reliance Mutual Fund. The company pays the interest due. A consortium of 30 lenders led by Union Bank of India will meet today to seek a resolution for Diwan Housing's 90,000 crore debt. PwC resigns as the statutory auditor for Eveready Industries, citing its inability to analyze the impact of financial support extended to the promoter group entities. And of course, we'll watch out for what's happening to the auto space as well today. But that's coming up later on. Let's take a look at the trade setup for the day. The world is not an unhappy place, let me put it that way. While Friday's close may have been a bit tempered for the US markets as well, this morning, or when you look at the rest of the screen starting off, about 0.5% in Friday's session, but the futures have started off on a higher note, which is the US market futures, and Asia is awash with green. So there is green on the screen throughout. Nikkei 1.8%, Shanghai about 1.96%. The SGX Nifty may not be showing a really dramatic start upwards, but it is showing a marginal tick of green, which is not unwelcome. But frankly, the S&P futures or the Dow futures currently as well are trading with a fair degree of green. So the market is looking fairly positive right now. The question mark only is, can it do further? Can it move ahead? And the reason for this, simple. The temporary truce, as we've called it out here at Bloomberg Quint, between Donald Trump and Xi Jinping, leading to the world markets having a bit of a risk-on mode currently. Before I talk about what's happening to India, what's happening to other things, it's important to look at the globe. The other big factor from a global perspective is what's happening to crude prices. The other big thing that happened at G20, which almost renders the next week's OPEC meet meaningless, is Vladimir Putin and Saudi Arabia, Russia and Saudi Arabia, agreeing to extend the production cuts for 6 to 9 months for this year at least, and maybe into early 2020. So two big developments that have happened at the G20, amongst a lot of other small developments that have happened. Let's get in a global voice first to talk about that, and then of course we'll talk about the Indian trade setup as well. Seth Freeman, Senior Managing Director at Grass-Ratner Advisory and Capital Group, joins us right now on the phone line from California. Seth, good having you. Thanks much for joining in. We're calling it a temporary truce. The equity markets are fairly happy with that. How are you reading into this? What's the impact on markets? Will it be long-lived or will it be a short-term impact?
I think it will be a short-term impact. I think investors, the markets, were looking for any form of positive news. But as you said, this is a truce. There's not a deal here.
What you think the market? I mean, said leading into the event, to a number of people that I spoke to, everybody was sitting on the sidelines. They were saying there's a 50-50 chance that a truce can happen and a truce cannot happen. Now the market gets disappointed with an unknown. What, you reckon this was not an unknown, or at least it was not a negative unknown? People didn't expect that there'll necessarily be a truce, and they've got some positive news, and therefore this reaction today on the Asian screen and in the S&P futures.
Well, we have to remember that China can play the long game. President Xi is not running for re-election, and nor is the Politburo. And they have the time and a much longer time horizon to hang in there and achieve some of their objectives in this. We have to remember how this started. And so I think that we have to remember that these things take a lot longer than a Monday morning announcement.
What do you reckon, Seth? I heard you mention in your first or opening comment that this will be a short-lived uptick for the markets. What happens next? I mean, the market was looking at the trade war as the one big negative. Even during the sidelines of this truce that happened, there were comments coming in from IMF as well, talking about how growth is lagging. Do you think that comes back to haunt the equity markets?
In the midterm, all of this is somewhat interconnected with, like you're suggesting, views on growth, which also ties into expectations or hopes of what the Fed might do. And there was some ideas, I think, that that the trade war was actually helping suppress growth, and that would lead to a 50 basis point interest reduction. But now, kind of ironically or perversely, if we see some hope between the U.S. and China, the perceptions of slowing growth might erode a little bit, and the Fed may end up not cutting 50 points, maybe 25, which I always thought was more realistic. But these things are definitely connected.
So what happens then?
We can't forget it.
Yeah, I agree, Seth. So then what happens? One, to the U.S. markets, this temporary uplift, movement upwards, how long could it last? Because last week we were looking at some Goldman Sachs indicators as well, which is suggesting that the U.S. markets also seem overbought. One, do you second that view? And if that were to happen, what happens to the emerging market pack as well?
Well, it certainly puts pressure. I'll answer the second half first. It puts pressure on investing in emerging markets. And, in particular with India being such a big oil importer, small increases in global oil prices is negative for India. But investors just don't like uncertainty. And, this hope of a truce, no new taxes, no new tariffs is well received.
It certainly is. Actually, since you brought up oil, Seth, I'm tempted to ask you, is there a bit of an undercurrent now? The agreement between Saudi and Russia seems to suggest that cuts are here, or the current production levels are here to stay for the 9 months at least. Add to that the backdrop of a temporary truce, and that should be viewed positively. Do you reckon a short-term bottom for crude prices has been made here?
I think we have to wait and see what the expectations are for manufacturing, but also winter, for example. Ironically, higher crude prices are actually good for the U.S. Oil industry because horizontal drilling is more expensive to do than old conventional pumping. So, in a way, slightly higher prices are good for the U.S. oil industry.
Yeah, but one final question on that set would be that because the near term would also be dictated by how the sentiment is. Do you think the sentiment is setting a stage for some potential upside, or at least capping the downside for crude prices, or you don't believe so?
I don't think it's a bottom, or we've left some sort of base in oil prices. It's kind of strange. We actually have, the U.S. is such a consumer-oriented economy, and consumers are actually generally very happy right now. And it really has to do with what industry is doing. And frankly, the trade war and so forth is putting a lot of pressure on auto sales around the world.
Yeah, that it is. It's an important day in India as well because the last month auto sales numbers get released. So we'll be watching out for that as well. But Seth Freeman, thank you so much for taking the time out and speaking to us out here at Bloomberg Quint India.
Thank you.
Well, that's the view from Glass-Ratner Advisory. Seth Freeman, fairly noted name. Two important things, frankly. One is the temporary trade truce. The equity markets may be rejoicing that. Don't quite know how long it will last. The big thing is crude, of course. And Seth doesn't agree so, but we'll be talking to experts throughout the trading day today to talk about what's the impact on crude as a result of the temporary truce, or rather the agreement that Russia and Saudi Arabia had entered into. Let's see. Small uptick seen today. Let's see if that has an impact on Indian markets too. Speaking of Indian markets, I think what one should watch out for, aside of course what's happening to crude and the global markets, are two big important events from an Indian perspective. One, the auto sales numbers start trickling in, as I was saying. The June auto sales numbers start trickling in today. So I think it's an important thing to monitor from a sector perspective. From a sector perspective, but more so from an individual stock perspective, D1 Housing Finance, it's a key meeting today. Could turn out to be a key meeting, let me put it that way, because the lenders are going to meet today to seek resolution for the debt worth 90,000 crores. The story on the Bloomberg Quint website also suggests that the lenders may consider converting some portion or all of the portion of the debt into equity and become the largest shareholders in DHFL. Now, this would be important. It's not necessarily good from an equity shareholder's perspective. We've seen what's happened to Jet with lenders taking control. So whether or not that happens to DHFL or no, it's a completely different kettle of fish altogether. But if the debt is converted into equity, then there is some hope, because right now debt is the big problem for Dewan Housing Finance. The ability to service the debt is a big problem. This will be a very important meeting. We'll be on top of it, of course, but do watch out. A very, very important meeting from DHFL's and maybe from the NBFC sector perspective. However, that's not the stock that could react at 9:15. I think what would react at 9:15, 3 or 4 names that I thought were very, very important. The repayment concerns for both Reliance Home Finance and Arnam. I'll talk about this in greater detail, but Arnam has defaulted in principal repayment of NCDs worth 400 crores. They've used the term rollover, so maybe I can use that as well. But essentially, the NCDs were held by Reliance Mutual Fund, and therefore both Reliance Home Finance and Reliance Nippon Asset Management could be in focus today. Everready would certainly be in focus today. PwC is resigned as the statutory auditor on June 28th, as our headline stated. They couldn't verify whether what's the quantum of support that the listed entity is given to promoter group entities. As a result of that, they have resigned as the statutory auditor. This, in all probability, will have an impact on the stock price for Everready. Not that the stock has done really well, but should have an impact on Everready Industries. So let's watch out for that as well. Do watch out for Balakrishna. They have commenced trial production of phase 1 of Carbon Black project. The project has a capacity of 60,000 MTPA in Gujarat. Usually markets like setting up of a capacity that enhances top line, etc. We've seen this happen with a number of other companies in the past, like Deepak Nitrite, for example. Should be interesting to see if Balakrishna Industries does well. Tire companies aren't exactly doing that great, so it'll be interesting to see what Balakrishna Industries does. And another ADG group name is Reliance Infra. I'll watch out for that one. Brickwork Ratings has downgraded the bank loan facilities worth 1,151 crores to a D from C. Lastly, a couple of things, one from a market's perspective, one not from a market's perspective really. First, the gas distribution companies. Hitherto it was believed that it's an insulated sector, a moat, no fresh competition coming in. Hey, PNGRB has introduced a concept paper thinking of introducing competition or facilitating competition in this sector, newer players in this sector. Will the markets like it? Arguably not. Yes, it has a long-term impact. You speak to the managements, they'll tell you, we'll see, competition is always good for the markets. But I would reckon this would be viewed maybe slightly negatively. Let's wait and watch. And lastly, off markets, just before we tell you what's lined up on First Word, it's an extended trade setup. Watch out for the Bitcoin. It's collapsed and come off quite rapidly overnight on Friday's session. So look at that fall that's happened. It's a market that trades virtually 24 hours, but after having a really smart surge all through the better part of the last 2 weeks, the last 2 or 3 sessions has seen a dramatic pullback into Bitcoin as well. Do watch out for this. It's a cryptocurrency a lot of people track. Do watch out for Bitcoin as well. Let's tell you what's lined up on First Word today. It's a collection of the top editorial stories that we believe we should bring to you. Reliance Home Finance has bought some time to meet the repayment obligations, and Reliance Mutual Fund has taken a hit. We take a closer look. There is no revival in retail auto sales even after elections. Sajid Mangat will tell us how much vehicle registrations have fallen, and analysts are losing confidence in their stock bets this year. They have cut target prices for nearly half of them. Samit Sarkar will bring us the list. Okay, quick update on what's happened post-market hours for the ADAG group and Reliance Home Finance and Reliance Mutual Fund in particular. So Reliance Home Finance has failed to pay Reliance Mutual Fund a tranche of its principal repayment amount. The Anil Ambani promoted firm could shore up only the interest amount. What ensued after that is also quite interesting. So one, the news, the 400 crores that matured on Friday, Reliance Home Finance has said that they have refinanced and not defaulted. That is the key thing. They have paid the interest due, which is great, but they've not paid the principal amount, and the instrument has been extended by 4 months until October 31st, 2019. Now look at this. Look at this statement. Almost everybody branded this as a default, and then Reliance Home Finance or the ADAG group came out and gave statements to the effect which tries and does a bit of damage control. They are saying, in view of the continuing severe liquidity crisis in the sector, as now formally recognized even by the RBI, the maturity of NCDs of 400 crores has been extended till October 31st, 2019, with formal written consent from the concerned debenture trustees and NCD holders. Now, I mean, I'm trying to think of what else would you brand this if you wouldn't brand it as a default, but Reliance Group begs to differ. Now remember, in April, the credit rating agency CARE Ratings had downgraded the debt to default already. That cited delays in servicing debt. A week earlier, Reliance Home Finance's parent company, Reliance Capital, said it has reduced the outstanding commercial papers to 75 crores only from 950 crores earlier. So you could sniff that something was around the corner. It has happened, but the ADAG group is defending this. Now, what's happened as a result of that? One, of course, what the stocks did in Friday's session or the last week is interesting. Reliance Nippon Asset Management may not have fallen as much, but Reliance Home Finance, which is now almost moving towards a single digit, fell about 8.5% in Friday's trade after having an indifferent week or a half-decent week as well. And in today's session, if it falls further, and which in all likelihood it will, then you could probably see it nudging towards the single-digit mark. Reliance Nippon Asset Management hasn't fallen as much thus far, but there is an impact on the schemes that Reliance Mutual Fund has. There are markdowns that have happened for those schemes. So your FERCDA markdown, the security is held by 19 other schemes. It is approximately 2% impact on the NAVs of some of these. I've just got a small list of the schemes that get impacted as a result of the markdown. So the Reliance Hybrid Bond Fund, the Ultra Short Duration Fund, Credit Risk Fund, Equity Hybrid Fund, Strategic Debt Fund, and Equity Savings Fund. The simple message out here is that if you are a credit risk fund holder or instrument holder or any kind of debt fund holder, and if you believe that the crisis is past you, maybe not from an NAV perspective, there could be temporary or permanent markdowns that could happen, which don't leave a good taste in the mouth. So keep this at the back of your mind. Some of these schemes have already gotten impacted. You would argue that maybe there is no point in selling them right now, but do connect with your financial advisor and try and figure out what else in your portfolio which might be facing some markdowns as a result of things which are floating in the air already. Not a good day for the ADG group firms, I'm afraid. Reliance Infra 2 was downgraded. Moving on, the next piece on First Word. The BJP's victory couldn't manage to move the needle for car and bike sales in the country. Automakers were betting on a revival after the elections got over, but June's actually been worse than previous months. Registrations have fallen to the lowest levels in 18 months, with passenger cars being the worst hit. Sajid Mangat, who's been going through the data, put out on the Vahan portal, joins us now with the details. Sajid, now we did a small analysis of this a week back. What do you have for us now?
Okay, we did what we did was the inventory sales and how two-wheeler inventories are much more than three-wheelers or passenger cars or commercial vehicles, and what kind of pressure is coming on the dealer front because of those factory sales coming onto them. What we did is that we looked at the registration data of RTOs across 31 states and union territories, and what we came to know is that the sales are at least are at a 18-month low, and these are retail sales and not wholesale numbers, which companies are going to announce today or over the next few days, or even Siam is going to announce in a week's time. Those are factory gate sales. The difference between factory gate and retail is primarily because basically the company is producing manufacturing a vehicle, sends it outside the factory. Those gets stored in warehouses or godowns before sales actually happen at the dealer end. The dealer sales that happens is a retail sale, and it's recognized by when a registration of a vehicle happens by paying entire amount on the registration, insurance and statutory dues, and that's how you recognize a retail sale. Those sales are at 18-month lowest since December 2017. If you look at on overall basis, month on month, sales are down 16%, or on a year to year is 14% down. Something which our survey also pointed to when we did it on Friday, Saturday, saying that the numbers are going to be little, edgy when it comes out this week.
Yeah.
But our survey
starting today.
So the companies may be pushing sales out to give a growth figure out, but on the ground it's inventory build-up which is happening, which is there. We didn't see much of sales happening except for the week of Eid, where some kind of sales happened, but it did not, it basically slowed down post that. So it was 1 week of sales that was that brought in some kind of optimism, saying that sales are reviving, but it didn't go through after that.
So where are the numbers looking, good or bad, Sajid?
there's no good here.
There's no good here.
There's no good here. The numbers are looking bad across the board. Two-wheelers being the one where we've seen a month-on-month fall of 15% and a 14% year-on-year fall. For commercial vehicles, we've seen somewhere around 20% fall on a year-to-year basis and 15% month-on-month. Tractor sales are the most impacted. If you look at it, 12% month-on-month fall and 43% year-on-year fall. So those have nearly come down to that level. If you look at the what do you call passenger vehicle, which is cars, the sales were around 1.8 lakh or odd in June as compared to 2.28 in May. So there's a huge fall in passenger cars as well, which is coming there. But to be fair, passenger cars, commercial vehicles, these are some of the categories where we have seen a production cut or production adjustment by the companies, and so the retail sales which are happening are more than the factory sales which are coming in, which basically means there's a destocking which is happening in these two segments. We didn't see that when we saw the inventory data for the two-wheeler segment. Neeraj.
Okay, thanks a lot for that, Sajid. That's an interesting analysis. Let's move on to the last piece. The ever-elusive earnings recovery, a slowdown in consumption and the global trade tensions have shaken analysts' confidence this year. They have cut target prices for nearly half the stocks listed in India. Sumit Sarkar is standing by with the biggest target revisions this year. Sumit, good morning.
Good morning, Neeraj. So if you see, analysts have lowered target price for nearly half of the Indian stocks in the first 6 months of 2019. The worst cut that we have seen in the last 3 years. Now, this is mainly due to the earnings miss, consumption slowdown that we have seen, and the global trade wars, which has led to volatility in the commodity prices. Now, target prices have been cut for nearly 132 of the 269 stocks that have been tracked by at least 10 analysts. That is the 49% cut that we are seeing in the first 6 months of 2019, which is the worst that we have seen at least in the last 3 years. Now, in 2016, if you see, nearly 50 stocks, analysts had cut target price for nearly 56% of the stocks that were tracked by analysts, at least 10 analysts. Now, in 2019, the deepest cuts were witnessed by sectors like auto, metals and telecom, while the biggest upgrades were seen in sectors like aviation, financial services and cement. Now, among the stocks that have seen the most cut in the target price, top of the list we have Simplex Infra, which has seen a 55% cut in its target price due to poor operational performance in the last 2 quarters, higher tax rate and because of working capital pressures. Also, if you see, Vodafone Idea's target price was lowered in the first 6 months, and that was because the company, as you can see, Vodafone Idea's target price was lower by nearly 38%, and that was because the company had raised close to 25,000 crore rupees via a rights issue, and to adjust that, analysts had to lower this target price by nearly 38%. Sterlite Tech, that saw a target price cut of nearly 36%, and that was because of the lower margins that the company had seen in the last 2 quarters, because of higher contribution coming in from the service segment and because of lower fiber prices. Now, for stocks like Arvind, Jamna Auto, Vedanta, Nalco, Motherson Sumi, SAIL and Ashok Leyland, the target price were cut in the range of around 24 to 34%. Now, on the flip side, if you see, nearly 137 stocks had seen an upgrade in the target price in the first 6 months of 2019, and to start off with, Interglobe and SpiceJet top the list. They have seen an upgrade of nearly 77% and 47% in the target price, and that is because of higher ticket prices, lower fuel cost and a stable currency. Now, for Manappuram Finance, a 37% hike in target price has come in because of operational efficiencies, that is the low cost to income ratio for the bank. Along with that, lower NPAs and robust growth in new businesses also led analysts hike the target price for this counter. For UPL, it was a hike of nearly 36%, and that was because analysts had to factor in the higher income and synergy benefits of its Arista acquisition that was done by the company. For the stocks like Bajaj Finance, HPCL, Bata India, Inox Leisure, the stock price, that target price were hiked by nearly 30 to 35%. Now, if you see in the last 6 months, there was a lot of change that we had seen in the analyst preference also. Like Axis Bank received 11 new buys in the first 6 months of 2019, and that was because of a growth in its core profits seen in the last 2 quarters because of strong fee income and cost controls. Along with that, moderations expected in its credit cost, favorable change in its loan mix, expected improvement in its asset quality and a solid management also led analysts become more bullish for this counter. Now, for CG Consumer, the stock has seen nearly 10 new buy calls in the first 6 months of 2019, and this is because of a margin improvement seen in its lighting segment. Along with that, the management commentary of no impact of this consumption slowdown that we have been witnessing also led analysts to change their stance on the stock. Now, for other stocks like Berger Paints, Emphasis and HDFC Bank, they have received nearly 7 to 8 new buys in the first 6 months of 2019. On the flip side, if you see, Yes Bank has seen 13 new sell calls in the first 6 months of 2019, and that is because of a slower loan growth, increasing asset quality risk, high credit cost, higher dilution risk because of the fall in the target price that we have seen for Yes Bank, and credit rating downgrades that have led to nearly 13 new sell calls for the stock. And the rest 4 are all auto stocks, that is Bajaj Auto, Eicher Motors, Ashok Leyland and Maruti Suzuki have witnessed nearly 8 to 11 new sales call, and that is because of the slowdown in auto sales that we have witnessed in the first 6 months of 2019.
So, Sumit, thanks so much for putting that into perspective. That's all that we have on First Word today, but lots more lined up on Indian Open. We talk about all the funds and private equity the funds and the private equity investors are expecting from the budget on July 5th. And the Reserve Bank of India says there is greater discipline in NBFC sector post-crisis, but has this wisdom come too late? We discussed that with Krishnan Sitaraman of CRISIL. But after this break, a full tilt towards the day's trade.